So what happens when a stock just completely goes into free fall? I mean, the charts all turn red, the headlines get really loud, but the real story? That's always hidden in the data. Today, we're going to do a deep dive into the technical report for a company called YYAI Inc. to really understand the anatomy of a catastrophic stock crash.
Just take a look at this number, negative 98%. Let that sink in for a second. In just 3 short months, that is how much value was just completely wiped away from YYAI stock. It's a figure that honestly represents a near total collapse.
So, how do you even begin to make sense of a drop this huge? Well, today, we're going to act like financial detectives. We're going to follow the clues left behind in the trading data, piece together what happened, and see what the analysis suggests might be coming next.
Okay, first things first, let's set the scene of the crash. To understand the why, we need to be absolutely crystal clear on the what. And let me tell you, the numbers that define this scene are, well, they're staggering. The stock went from over $5 a share all the way down to about 8 cents. Think about that speed for a moment. A 3-month window is an incredibly short amount of time for this level of destruction. This wasn't some slow decline, this was like falling off a cliff. And the report, it pinpoints the exact tipping point. On one day, October 7th, the floor just completely fell out. A massive number of shares, we're talking over 445 million, were traded as the price just collapsed. That kind of volume, it signifies a panic, a total rush for the exits that just completely overwhelmed anyone who might have been buying. All right, now that we've seen the event itself, let's start our investigation. To really get a handle on the crash, we first need to look at the stock's long-term habits. What was its normal behavior before everything went so wrong?
A really key clue for this is something called the moving average. You can kind of think of it like a stock's long-term memory. It tells us the average price over a set number of days, and that gives us a baseline for what's normal. Is the current price just having a bad day, or is it completely, totally off the rails?
And wow, here is our first major clue. The current price is about 8 cents, but its average price over the last 200 days, $1.38. The point here isn't just that it's below its average, it's trading at a tiny fraction of its own long-term habit. This tells us the situation is exceptionally severe.
And other clues from the report just keep backing this up. Think of these as different forensic tools, and they're all telling us the exact same story. The ADX, which measures how strong a trend is, confirms this downtrend is powerful. The Airwa indicator, it's at its maximum bearish reading, which suggests this isn't ending anytime soon. And the MACD, a momentum gauge, shows that selling pressure is firmly in the driver's seat.
So the long-term trend is profoundly negative, no doubt about it. But what about the crowd's immediate reaction, the short-term stuff? For that, we've got to turn to the trading volume and the momentum indicators.
Over 500 million. That's the average number of shares traded every single day in just the last 10 days. This is not normal trading. This is a frenzy. This number reflects extreme selling pressure and something analysts call capitulation. Basically, it's where investors just give up and sell at any price they can get.
But, in any good investigation, you have to look for contradictory evidence. Is everything pointing down, or is there maybe a single clue, just a glimmer of hope that suggests things might be about to turn around?
And this is where it gets really interesting. We have this contrast. There is one bullish whisper. An indicator called the RSI is in oversold territory. In simple terms, this can mean the selling has been so intense, it might just be running out of gas. But that whisper is being completely drowned out by a bearish roar. The powerful downtrend we just saw is still very much intact, and the volume data shows no real buying interest has shown up yet.
So, we've reviewed the evidence from the past and the present. Now, where does the analysis suggest YYAI is actually headed? Well, the report doesn't just give one answer. It lays out 3 potential scenarios, and each one has a calculated probability. The most likely future, with a 70% probability, that's the big slice of the pie right there, is the bearish scenario. The report suggests that if the stock keeps showing weakness, the path of least resistance is going to be further down, maybe towards that 5 to 6 cent range.
Next up is the neutral scenario, sitting at a 20% probability. Now, this isn't a recovery, it's more of a stabilization. The stock would stop falling and instead just kind of bounce around sideways in a narrow range. For that to happen, the selling pressure would finally have to ease up.
And finally, we have the long shot, the least likely outcome. At just a 10% probability is a bullish rebound.
For the stock to actually bounce back, the report says it would need a huge, sudden surge of buyers to push the price through several tough layers of resistance. The data suggests the odds, they're pretty long.
So, after weighing all the evidence, the long-term trends, the crowd's reaction, the future probabilities, what is the report's final verdict on the state of YYAI?
Well, the conclusion is pretty clear and direct. The stock is in a deep, powerful downtrend. That one oversold signal we saw, it offers only the faintest hope. The massive volume and the wild price swings, they just highlight extreme risk. And ultimately, the analysis shows the path of least resistance continues to be down.
And this quote from the report really just sums it all up. A risk/reward ratio of over 200. It highlights what's called asymmetric downside potential, which is just a technical way of saying the analysis suggests the potential for loss is vastly, vastly greater than the potential for gain right now.
And that leaves us with a final thought. When the data paints a picture of such profound weakness, and a single number can tell you that the risk is over 200 times the potential reward, it really forces you to ask, with the odds stacked so heavily against it, what does a number like that truly mean for the future of a stock?